They laughed when it was trading just above $1. Now the same people are watching closely, wondering if Opendoor can actually pull off one of the biggest comebacks in the real estate tech world. The stock's been unpredictable, it's been volatile, and right now it's sitting at a major turning point. Most traders only see the price chart, but behind the scenes, something much bigger is happening. And over the next few weeks, it could completely change how Wall Street looks at Opendoor. So if you're holding shares, thinking about buying the dip, or just trying to make sense of all the noise, stay tuned. Because once you understand what's really going on, you'll see why this next move could catch a lot of people off guard. Hit that thumbs up if you appreciate the deep dives, and let's get right into it. Opendoor closed down about 4.1% today, hitting a low of 8.12 cents and a high around $8.70. Now that might sound like just another red day, but here's the thing. This wasn't really about Opendoor itself. The entire market was shaky after Jerome Powell spoke earlier today. He avoided making any clear statements about rate policy or inflation, and that uncertainty triggered panic across the broader market. When the Fed stays quiet, traders react fast, and stocks like Opendoor, which thrive on momentum, feel it first. Volume also dropped big time. Only around 92.8 million shares traded today compared to the average of roughly 327 million. That's one of the lowest trading days we've seen since August, back when the stock was hovering in that $1 to $2 zone. Low volume means low liquidity, and when liquidity dries up, momentum stocks like this become easy targets for manipulation and short pressure. And that's exactly what played out. Short sellers jumped in hard today. About 12.9 million new shares shorted, bringing total short interest to roughly 156 million shares. That's 22% of the free float now being shorted, which is massive. So while some retail traders were waiting for a bounce, shorts were doubling down. But here's where things get interesting. Opendoor just announced it'll report Q3 2025 earnings on November 6th, after the market closes. And honestly, this one could be a big deal. Not necessarily because of the earnings numbers themselves, but because of what management says about the company's rebuild. Here's why that matters. Opendoor's leadership can still frame this quarter as part of their recovery story. They can say they inherited a damaged business model and are now restructuring from the ground up, cutting costs, improving efficiency, and stabilizing the platform. That kind of narrative can easily buy them another quarter of market patience. We've already heard from insiders like Keith that they've made significant layoffs, a huge reduction in headcount. Those cuts probably won't show up in Q3 results yet, but they'll hit in Q4, and that's when you'll see the numbers reflect cost savings and improved margins. And if the company guides for stronger results in early 2026, that could reignite momentum very quickly. Now, there's been a lot of debate online. Some traders are saying the pump is over, now we need real fundamentals. Others believe Opendoor still has another leg up coming. Honestly, both sides make valid points. The run we saw earlier this year was clearly driven by retail hype and momentum. But no stock can keep that going forever without fundamentals. You can't just throw random price targets out there like $80 or $100. The company needs growth, profit, and direction to back it up. And I think management knows that. If this was just a hype game, they wouldn't be restructuring, laying off staff, and rebuilding operations. They just keep the hype alive and ride it. Instead, they're quietly working on stabilizing the business. That's a long-term move, not a short-term play. Now let's talk numbers again. The options flow today was split pretty evenly, around $28 million in call premiums and $11 million in puts. About half of all the trades lean bearish, which tells you investors are cautious heading into earnings. Bulls are targeting a short-term move back toward 9 to 9.50 cent, while bears are betting it dips to 7.50 cent or lower. Tomorrow, keep a close eye on the $9 strike price. There's heavy open interest there, meaning market makers will likely push to keep the stock below $9, so a lot of those call options expire worthless. That kind of setup often creates tug-of-war price action, especially on Fridays when weekly options expire. Institutional trading was quiet too. The largest dark pool prints came in at around $5.5 million, then $2 million and $1.4 million. No major buying pressure from hedge funds, meaning big money is still waiting for clarity from the Fed and from Opendoor's next earnings call. Technically, Opendoor is sitting around 8.14 cents, right between its pivot and S1 support level. 7.83 cents is a strong support area. That's the zone to watch for a possible bounce. If it breaks above 8.64 and holds, the next test is around 9.50. But if it slips under 7.80, you could see a quick drop towards 7.30. Now here's the important part. Opendoor just fell below its 10-day moving average, which usually signals short-term momentum is fading. That doesn't mean the trend is dead, but it does mean bulls need a catalyst, something fresh to bring new buyers in. And honestly, that could come from anywhere. A big interview, a bullish analyst upgrade, or even just strong pre-earnings chatter. Momentum stocks move fast once the crowd returns. If Opendoor delivers a strong Q3 narrative, even if numbers are weak, and pairs it with solid guidance for Q4, the stock could easily break back over $10. But if management fumbles or keeps things vague, we could see more sideways action through October. So what's the takeaway here? Opendoor isn't done. It's just in transition. It's a high-risk, high-reward play, and this consolidation phase could either set up the next breakout or another correction if confidence fades. If you believe in the long-term story, this is where smart traders start planning their next move, not chasing the pump, but positioning for the next run. Just remember, this isn't financial advice. Always do your own research, understand your risk, and never trade on emotion. So what do you think? Is Opendoor gearing up for a comeback, or is this just a pause before another drop? Are you holding, buying, or taking profits before earnings? Drop your thoughts down below. I'd love to hear what you guys think. If you enjoyed the breakdown, hit that like button. It really helps the channel grow. Subscribe if you haven't yet, because next week I'll be covering Opendoor's pre-earnings setups, short data, and potential catalysts that could move this stock before November. Until then, stay informed, stay focused, and I'll catch you in the next one.